A few days ago, we talked about America's power grid, decades overdue for rebuild, with AI about to push it over the edge. But the grid isn't the only piece of America's energy chain that's been quietly rotting. The US mines about 2.1 million pounds of uranium a year. Its reactors by nearly 47 million, and whatever uranium it does get still has to be enriched before a reactor can use it, a job America handed to Russia decades ago and still hasn't taken back. Neither gap is new, both have been sitting there for over a decade. What's new is what AI is about to do to them. So by the end of this video, you'll know exactly where this chain gets rebuilt and who gets paid to rebuild it, the two companies standing at each break in the chain. Now, that gap we just laid out, the one that's been sitting there, it didn't happen by accident, and it's actually two separate failures stacked on top of each other. The first is enrichment, the process that turns raw uranium into reactor fuel. The US stopped doing it at scale decades ago and handed the job to someone else. The second is mining, the raw material itself. Prices collapsed, mines shut down, and most never came back. Neither one was caused by AI, so why does it suddenly matter now? Because the demand side just changed completely. By 2030, data centers worldwide are projected to consume nearly 945 terawatt-hours of electricity, more than Japan, an entire industrialized nation, uses in a year. And in the US alone, the power capacity being built for data centers is set to nearly double by 2028. But why does that land on nuclear specifically? Well, you see, AI doesn't sleep. A training cluster needs power constantly at near perfect reliability. And that's the one thing solar and wind cannot promise alone. Nuclear runs at over 92% capacity factor. Wind runs at 34% and solar just 23%. If your next $1 trillion of AI infrastructure needs power that never blinks, there's really only one answer, and building new reactors takes years, so big tech isn't waiting. Hyperscalers have already locked up nearly 10 gigawatts of nuclear capacity across more than a dozen deals. Microsoft, Google, Amazon, Meta, all of them are racing to reserve capacity years before most of these reactors are even back online. But here's the catch. You can restart every reactor in America tomorrow. And none of it matters if you can fuel them. AI didn't create that fuel crisis. It just showed up and lit a fire under it. So let's take those two failures one at a time, starting with enrichment. So how did the US end up outsourcing this in the first place? All we need to do to answer is take a brief 15-second history lesson. After the Cold War, instead of rebuilding its own enrichment industry, it struck a deal. Take bomb-grade uranium out of dismantled Russian warheads, convert it into reactor fuel, and buy it. That ran for 20 years. And when it wound down in 2013, the domestic capacity that was supposed to replace it never fully came back. And today we have a quarter of the enriched uranium in American reactors still coming directly from Russia. Congress banned those imports in 2024, but the law comes with waivers running out to 2028. So the cord hasn't been quite cut yet, but it's been scheduled. And that gives this a hard deadline. Somebody has to build the replacement capacity before it hits. That somebody is Centrus. And in 2026, Centrus Energy signed a $900 million contract with the Department of Energy to build new domestic HALEU enrichment capacity at its Piketon, Ohio facility. That is the advanced fuel the next generation of reactors runs on, and the delivery is required by 2032. So we've laid down the story, but what does the chart say? We have the possibility to track a larger impulse that started back in 2024, where this would have been a wave 1 up. This would have been our wave 2 correction, wave 3 up that just stopped in October of 2025, and right now we are looking at a wave 4 that could have very well bottomed. It has 3 waves in place. It's not a very nice looking one, it's actually pretty nasty. But it did push into the last level of support, the 50% retracement for a potential wave 4. It did get a dip below it a couple of times, and we are already looking at decent signs of a reversal. Right now, it would still be early. We don't have any other confirmation other than taking out the previous highs before it has seen the last extension lower. But even that is actually decent. From a large time frame perspective, this is actually already interesting. If it manages to take the next highs around $203, all the better. And then the next target would sit around $230, yeah, this region where we have additional structural resistance. To be honest, this structure isn't highly suggestive of further continuation lower, and this isn't even the only possible path higher, but this would be my minimum expectation, to be honest, to build within this structure a wave 5 that takes us to new high territory. Yeah, we are looking possibly at $600, potentially even into $800, yeah, right here to be a target for this structure. Now, how do we know that this structure will succeed? Well, we actually don't. But I do know that as long as it can still hold the current structure, yeah, as long as it can still hold this supposed idea of a double 1-2 setup, it still has a decent chance. And for that, I am looking exactly at this level, yeah, $159, 158 region, to not be broken. If it takes the lows within this structure, yeah, if it dips below this region, technically it could still survive, but the likelihood of this pattern to do so would have decreased dramatically. Why? Because we only have 3 waves up. Until it can manage to build a larger, more reliable 5-wave pattern, we have to understand that there is a high risk that this structure would still end up failing. Then if it sees a break below the current lows, yeah, the wave 4 bottom, $142, right, exactly this region, the likelihood is that this pattern has failed. It would have formally invalidated this interpretation, and certainly other patterns would remain possible, including this being an actual wave 1 instead of a wave 3, but the likelihood of it working out would have decreased significantly, and it would require real proof, a real initial 5-wave move to the upside to be once again trusted. Right now, we are riding on this claim that this is a correction in wave 4, we see 3 waves down, not even very pretty ones, but the levels of support have so far held. So that's the enrichment side, the capability being rebuilt and the company doing it. But enrichment is only the process, it refines uranium, it doesn't create it. And since the US barely digs any of it up, the same push that's rebuilding enrichment at home now runs one step further down the chain. In late 2025, uranium was added to America's critical minerals list, a list it normally wouldn't qualify for, because it's a fuel. But they made an exception. The same reshoring effort pulling chips and manufacturing back onto American soil is now pointed at the raw material itself. And the timing makes this urgent. Analysts expect 2026 to be the year the math breaks, global mine supply falling while reactor demand rises, tipping the market into deficit. So, how bad is the supply picture actually? Well, in 2025, the world mined around 160 million pounds of uranium. Reactors needed closer to 180. That gap got filled the way it's been filled for years, by drawing down stockpiles. Except stockpiles aren't a source, they're a countdown. And that's the picture today. Before any of the demand we've been talking about arrives, the World Nuclear Association expects global reactor capacity to nearly double by 2040, and uranium requirements to climb from around 180 million pounds a year to close to 280 instead. So a market that already can feed itself from mining alone is about to be asked for a lot more. The buyers can see it coming. Long-term uranium contracts have pushed above $90 a pound, the highest since 2007. That's utilities paying up now to lock in supply years out, because they don't trust it will be there later. And all of this brings us to who's actually building the new American supply. UEC controls the largest uranium resource base and licensed production capacity of any US producer. They just started production in Burke Hollow, the first new in-situ recovery uranium mine built in America in more than 10 years. Yeah, this hasn't been done in over 10 years. So let's see what I actually have to say on the chart. Here we are dealing with a 5-wave pattern. We have been tracking this for a while now. We have the possibility to track this as a diagonal structure, and while it could be that this is the end of something, yeah, this could be the end of a larger structure, a larger trend, I actually believe this to be capable to be the beginning of a much, much larger structure, a much larger wave 3 that could very easily see this stock's price form a 10x in the very next move. And this is actually quite promising because while I already see the 5 waves up, that is quite clear, it has even started the correction, it has even reached the area of support. It also managed to already form 3 waves down, and I see this pattern as potentially complete. I believe it doesn't need to form any additional lows. I believe we could consider it capable to already have a bottom in. I believe the move that would lead a share of this stock to be priced at over $100 to have potentially already started. So in the case of this structure, in the case of this decline, I'm looking at this to have been a quite clear A, B, C pattern, and I believe it quite capable. It has fulfilled every single expectation we would have for such a pattern. It has formed nice proportions for the wave A and the wave C, and it has seen the bounce of the 50% retracement. And right now, all it needs to do is form an initial 5V move to the upside within a smaller time frame, provide a small time frame confirmation that a bottom would be in, and I believe I can see quite clearly where the top of this initial 5V pattern would form, as well as the next most relevant levels to be broken for yet another confirmation that this stock is ready. So let's go into the smaller time frame, shall we? And within this structure, we actually have a couple of options. Typically, we could consider this to have already built 5 waves up. I would generally prefer to see one additional high. I'm not necessarily convinced this isn't just a wave 3, and my main interpretation is going to focus on this being a 1, 2, this being the wave 3, having a wave 4 correction actually be created right now, and the wave 5 that I would generally expect to push into the $12 plus region. We have some structural resistance here, but that doesn't absolutely mean that it must top there. Certainly other interpretations could follow. I do see it possible that it builds something much more aggressive, but typically I would expect this 5-wave pattern to follow. I would expect in that case the levels of support for the wave 4 to not be broken. Yeah, it must hold, in this case, $10.40. But for true invalidation, since this is within such a small time frame and small time frames are typically not too reliable, it will ultimately need to fail holding the beginning of this entire move up. It will need to break below $9 before it can truly say that this structure has been invalidated. In that case, at the very least, we would have to assume a reset of this larger white wave too. But I do warn you, since this pattern is actually complete, including within this wave C, that if it sees another low, the likelihood is that it could push much lower. Take what has been formed in this structure, for instance, where I could have also counted a 5-wave pattern. It broke internal support, it invalidated the structure, right? It pushed below the beginning of this entire move up. It did manage to recover briefly, but ultimately, it dipped another 30% from that high. The same could be said about this structure if it fails to hold the current lows within this wave 2, except that if it manages to break the current lows, it would imply this being a 1-2, and the wave 3 would be expected to follow in this case, where the wave 3 is typically the strongest wave of any structure. Yeah, it could see much lower prices than what it has currently done within this decline. So you have the levels. We are looking for this initial 5-V move to the upside and then a 3-wave correction into an internal area of support. It is a bit early for that. I cannot give you the wave 2 area of support until we have the 5 waves up complete, but I can already tell you, especially from a larger time frame perspective, that the current lows we have in this white wave 2 around $9 must hold. For this pattern to succeed, these levels cannot be broken. It might get a chance later, but that we do not know. So that's it. You've got the story, the numbers, the deadlines, and both setups. I'll be straight with you. These are high-risk plays. Both companies are actually quite small caps. One of them is racing a legislated deadline, it might not beat cleanly, and the other is ramping production into a market that hasn't fully repriced yet. Neither one is a short thing, and both will move hard in both directions. They're actually quite volatile, but I think they're worth considering. And that is my read, not advice. You've got the same facts I do now. Go look at them yourself and come to your own conclusion. And that's the whole picture. So these are the levels, this is the trade setup. If you want the earlier piece on the grid, it should show up on the screen right now. But I hope you enjoyed the video, and if you did, don't forget to leave a like, subscribe, and if you enjoyed the content and want to support it directly, check out the channel membership, and I'll see you in the next one. Bye bye.